Well, good morning, everyone. Thomas Montgomery here. It's a beautiful Monday morning, September 9th, 2024. 55 degrees outside. If you see in the bottom hand corner of my screen, that's unusually cool for an early September day. But we have a hot topic, so it's okay. Today, we're on the nonprofit's website, 509 Pacific, nonprofit organization, and we're going to be talking about business startup loans. So if you're on the Zoom today because you're a distribution partner, this is going to change everything in terms of how you're able to communicate with your prospects. And conversely, if you're here because you're looking for funding to start or grow a business, I think you're going to love this very direct, very transparent approach. So let me go ahead and make the screen a bit larger. And then we're going to go from 509pacific.org to the business startup page, which is a new page, was not on the website before. So we had received feedback from a number of you, Bill, Claude, Ellie, a number of you that had kind of led us to this decision. And it is based around communicating some of the most popular funding options, and then getting the client engaged in understanding, do I qualify for it or not? Because one of the worst things we ever want to have happen is someone to enroll, and then a little bit of time goes by, and they ask, well, why haven't I been funded yet? Why don't I have my money yet? Because obviously we want clients to become funded. That's how we're paid. And then secondly, we want that to happen as soon as possible. But that was really an underlying symptom that we weren't communicating effectively enough what it takes to be fundable. We've been talking for months, maybe years, about you need a fundable business, you need a fundable business. But I think that was too abstract. So today, we're going to launch this new page of the website that makes it crystal clear. So the first step is we need to figure out what type of funding that the client, the participant, wants. Now, are there other types of funding other than SBA guaranteed loans? Absolutely. But these are some of the best, right? Because they're easier to qualify than most other funding sources. So there are SBA microloans. And just as the word microloan suggests, these are smaller in nature. The max is normally 50,000. Can be used for a variety of things. Repayment terms go up to 7 years. Now you might ask, well, Tom, why aren't you telling us what the interest rate is? We need to know the interest rate. Well, the lender decides the interest rates, and interest rates for SBA and most business loans tends to vary. Usually they're tied to the prime rate. So as prime rate goes up or prime rate goes down, the interest rates for loans tend to vary. So we're not the lender, we're the technical advisor. We received a grant to help prepare clients. So you're right, we're not going to quote an interest rate that might not be accurate. We're not going to say anything that's not accurate or might not be accurate. So this is one type of funding. Typically a pretty quick turnaround, obviously less underwriting scrutiny, but it's a smaller amount. Then when we get into 504 loans, SBA 504 loans, if we want just to categorize them, they're normally real estate or equipment. That's a very quick summation. Now, they'll go up to over 5 million. You can see a detailed description, but essentially real estate and equipment is a good way to summarize it. Repayment terms up to 25 years. And that makes sense, right? Because these are bigger ticket items, right? If you had a $5 million loan, you would want as long of a period as possible to pay it off. Because if you had to pay a $5 million loan off in 7 years, my goodness, the payments would be crazy high. So it makes sense. Longer repayment terms for these tangible assets. Then there are the 7A loans, and the 7A loans fall into a few different categories. There's the normal 7A, there's the 7A Express, the Community Advantage. We separated these two out just to let you know the Express loans are great We had one lender that was funding SBA 7A Express loans next day, up to 500,000. Now they're saying a week. So it's not as exciting as next day. But the Express loans are kind of what the word suggests. It's faster. It's not as much, only up to 500,000. But what the SBA has done is it does not require the SBA review that normal loans do. So that way it can be a quicker turnaround. These repayment terms are normally up to 120 months, 10 years. Then we get into our normal 7A loans. Those will go up to 5 million, used for all different types of purposes, as you can see here. Pretty quick turnaround time. Repayment term can vary, often 10 years, but could be up to 25. So why are we throwing this out here? Well, we don't have to go after an SBA loan, and an SBA loan is not going to be right for all clients, but in many cases it will be. And we've got to figure out what the end goal is, because as we're preparing the file, it needs to be fundable for the end goal. So step one is identifying which of the loan types under the grant that the participant wants to focus on. Doesn't mean that they can't change their mind, doesn't mean that we can't go outside of these, but it sure helps to know what direction we're going. Step two is the more important point of discussion today. So step two really digs into what does it take to be fundable. So again, we've used those words, we've used those phrases, but I still don't know that all of you really have your arms around what it means to be quote unquote fundable. So now we're just making it just 100% transparent. We're pushing it out in front of everyone. Here's what it takes. So let's read what's on the page. Our 501c3 nonprofit organization received a grant to prepare entrepreneurs and their businesses to qualify for an SBA loan. I've already said it doesn't have to be SBA, but that's a common goal because of the lower cost, easier approval. For us to assist you and to receive the grant, it's required that you complete the checklist. So now as we bring clients on, as we onboard them, all of them are going to be asked to complete this checklist. And then you might find, if you're one of our distribution partners, that this could help you in your outreach as well. But we'll come to a conclusion on that separately. So then here is pretty much like the glossary, because again, a lot of people do not know what you know. They know they want money, they need money, they want money, but often they're not fundable. And so we've been out there talking about, well, we can help you become fundable, but often the light bulb often doesn't go off with the typical prospect. No, I don't want that, I just want money. Well, you don't just get money, you have to be fundable, you have to qualify for it first. So let's look at the key elements to be fundable to make sure we're all on the same page. We need to have a lender compliant business plan. Now, we added the adjective lender compliant because certainly we've seen some business plans come across that we would be embarrassed to send to the lender. So not being discouraging, but they're not ready. They're not finished. They're not good enough. So it's not, oh yeah, check a box, I've got a business plan, move on. No. We need to actually look at the business plan if they have it, or create one if they don't. This is going to describe the business, what are the services offered, who are the owners, how much funding are we requesting, what are we going to use it for, a little bit about the business owner, singular, or owners, plural, background, kind of substitutes for a bio or a resume. And so this is very important. This is very important. Most small businesses don't have this, and that's okay. We provide that. That's part of our value proposition that we provide at no cost. So, okay, now what we're doing is we're pulling back the curtains. We're looking deeper and understanding and creating literally a checklist of what do I need to be ready for funding, for business funding. Business plan. Anyone have questions on the business plan? All right, so Bill's asking a little bit about this. Yeah, so if we're working with a client and they say that they have a business plan or any of these other elements, we say, fine, submit it in so we can review it. And if it's not broke, why fix it? So we'll look at it. If it's good to go, great. I was just talking to a client just a moment ago. He went out and spent a lot of money paying someone to develop a business plan. And I'm like, well, I'm sorry you did that, Mr. Johnson. I don't know why you did it because it's included for free. But anyway, you need to know, everyone needs to know that this is important and it's included for free. Okay, so we good there? Here's the next one, and this is more confusing. I think a lot of people say, business plan. Yeah, I'm with that. But when it gets to the commercial lease, I feel like sometimes people look at the list and they're like, that's not important to me, move on. Well, this is not about your opinion. And frankly, it's not about my opinion. This is what it takes, right? This is the factual list. So most lenders, including the SBA, are now usually requiring not just that you have a good address to say, oh, yeah, it's a good address. It's not a residential address. It's not a post office box. But they typically now are asking for a copy of the lease, and the lease must have certain provisions in it. So the lease must be to the operating business that's applying for the loan. So what do I mean? So let's take Ernest. So let's say Ernest forms a company called Ernest Inc. And Ernest Inc. wants funding. And Ernest says, oh, yeah, I've got a lease for Harris Incorporated. And it's like, no. That's not the company that's applying for the loan, right? It's Ernest Inc., not Harris Inc. So that seems kind of obvious, but the lease literally needs to be in the right name of the business to start with. It's not like, oh, I just have some lease that'll do the trick. Secondly, and this is a huge one, and again, I share this with you not asking your opinion. You and I do not sit on Congress. We're not part of the US Congress that makes decisions and changes to the SBA SOP, Standard Operating Protocol. This is about facts, not if you like it or not, or if I like it or not, it's facts. So what's another provision in addition to it being in the right name, which kind of makes sense? The lease term must match the repayment term of the SBA loan. So that is often a barrier, but we provide that. And then there also has to be specific language in the lease that says that the landlord is subordinate to the lender of the SBA loan. A lot of technical terms there I don't want you to get bogged down with, but what's the point? To qualify, the business must either own its own property or have a lease, and there are certain requirements that it has to meet. But no worries, we provide that. We understand it. We used to work for the SBA. Every year when the SBA protocols were released, we had to go to a conference in Washington, D.C. to learn about the changes. So we understand this. We'll navigate the details. But if you don't at least understand what it takes to be fundable, A, you're probably not very good at helping others. And B, if you're looking for funding yourself, you're missing key knowledge. All right. Any questions, comments on the commercial lease? Okay. Next, we need to have a compliant business entity. So here it describes the business applying for the SBA loan must be in good standing with federal and state governments. So the easiest example of that is, okay, if the business has been around, is it filing tax returns? Now, some of you say, well, my business has been around, but it really hasn't made any money, so I'm not filing any tax returns. Well, you might want to look at the IRS tax code. Depending upon how you structured your business, you may be still required to file tax returns, even if there's not a penny of revenue. And also, regardless of that, can you imagine us going to a lender and saying, yeah, we've had the business for 3 years, but we've not filed tax returns because we've never figured out how to make any profit yet? It sounds horrible. So if the client has a compliant entity, great, we'll use it. If not, we will provide them we'll form a new entity for them at no cost. But we're going through what's the checklist? What does it take to have a fundable business? Lender compliant business plan, we covered it. Commercial lease that has certain provisions, we've covered it. And of course, we need an entity that's in good standing. Next, detail. And again, if you have any questions, comments, concerns, feel free to type it into the Q&A. But again, I'm the messenger here. I'm not the developer of lender protocols, underwriting protocols. All right, so next, detailed list of collateral. To no surprise, lenders don't want to lose money. Well, how would a lender lose money if the borrower didn't pay them back? Well, how does collateral fit in? Well, collateral would be the assets that the borrower pledges to the lender that the lender can take or have if the borrower doesn't repay. So, as described here, for the SBA to consider the loan fully secured, the applying business must own enough qualifying assets. But again, we can do that. We've talked to you, and we were working on, again, just this morning, Marco's file. Marco, $5 million loan. He didn't have enough collateral. We literally transferred to him $5 million of collateral. It's real, it's legal, works. So often we'll find clients don't have enough collateral, but we built that in. We provide all the participants free collateral because we know that's often an issue. Next, financial statements. Some people don't even know really what financial statements are. So the chances that they actually have financial statements ready to submit to the lender is remarkably rare, but we'll help them with that. So what are some of the standard financial statements or financial reports? A PFS, personal financial statement. So that talks about the assets and liabilities that the business owner or owners have. When we talk about owners, plural, typically anyone that owns 20% or more of the business will need to be part of the underwriting process. However, if people have less than 20% ownership, often they don't have to be part of the underwriting. So normally we'll get a PFS for everyone with 20% or more ownership. In contrast, so that's for the person. That's why PFS, personal. And then we have the business balance sheet showing assets and liabilities of the business. And then the income statement of the business showing it's like profit and loss, revenue and expenses. Sometimes people say, oh, no, this doesn't apply to me. My business is new. I don't need any of that. Pure ignorance when you hear someone say that. Don't let them think that because it's not true. Even a business that was just formed yesterday should still have a balance sheet. Now, there may not be much on the balance sheet, but we still need to be able to report it. So, is that a problem? No, we can help fix that. Lastly is creditworthiness. Creditworthiness is more difficult to summarize down into a bullet because there's personal credit and business credit, and some lenders only look at business credit. Some also look at personal credit. But if we're focused on kind of the bread and butter of SBA loans, which is the title here, right? Which is not exclusively all we can help with, but it's the most desirable. We know that we need to have at least a 140 FICO, 140. People say, oh, that's a mistake. That's not true. Well, it is true. Read the standard operating procedures of the SBA. So a lot of people don't even know what their business FICO is. We'll help assess that, and then we can help them improve that legally. So this is really a glossary that I think you wish and I wish we wouldn't even have to have this discussion, because we would hope that our school system and our college system and our entrepreneur ecosystem would teach people what it means to be fundable. But I'm telling you, most people don't know what you and I know. So with that being said, this is what it typically takes to be fundable. So here we get to the point of today's discussion. We have implemented a loan checklist. A loan checklist collects the name, email, and phone number of the participant. and then there's a checklist. And you notice how it's worded. So hopefully they understand what it takes to have a good business plan, because we've introduced it here. So it's not just, oh yeah, I have something written down on a napkin, I'm good to go. But it's, do I have a lender compliant business plan? So here they're able to go through and check whatever it is that they need help with, or uncheck what they don't. So when they come in, we're able to focus in on those areas that most need assistance. Now, we're still running through the 28-day process. We're not changing that. Our goal is still to take an enrollee and in 28 days getting them fundable. So we're not changing what we're doing, but we're changing the upfront intake to better help participants understand why they should enroll, the benefits of enrolling. Because you can imagine, let's say that you have someone and they check all these boxes. In other words, they don't have any of these things. They need help with all of those things. Is that a bad thing? No, that means they're perfect for the program, right? That's exactly why we exist. But if they're kind of ho-hum of, oh, I can't believe I can't get funding, when, well, of course you're not fundable yet. We need to address these things, and that's exactly what we do. So let's talk about how you will clear this off. How could you use this? Well, if you're a prospective participant, you're just an entrepreneur joining us either live or listening to this recording, and what you're wanting is to get funding to start or grow a business, then go to 509pacific.org, scroll down here, click this, read whatever you want, but fill this out and it'll come in. So then one of our advisors can reach out to you and help you. So that's from the participant perspective. But at a higher level, those of you like Bernard and Bill and Charles and Claude and Dorothea, we have 420 of you on right now. Most of you are our distribution partners. Hopefully you can see how powerful this is in terms of educating prospects what it takes to become fundable, how we can help them, because all of this is, of course, what we do, and a way to be able to quickly assess them. Because I think some of you have spent so much time where you're bogged down, for a half an hour or an hour with each prospect. Now we can simplify that. Now essentially it's them just simply checking the boxes, and the more boxes they check, the more help they need. It doesn't make the cost go up, it doesn't make the time frame go up, but it's kind of like a self-assessment. So hopefully the light bulb goes off with them. Oh, wow, okay, yeah, I want funding. I'd like one of these types of SBA loans, but oh, now I understand what it takes to be fundable, and I realize I need help in some of these things. That helps make it less abstract and more tangible why they should enroll. Hopefully that makes sense. All right, so I'm going to stop talking and start listening, and of course responding to your questions, comments, concerns. So whether you're on the client side or distribution partner side, who has questions, comments, concerns about this checklist? All right, so Greg's asking, can he use this checklist? Yes, we can do a couple things. I mean, you see how it's all laid out, so you're more than welcome to pull any of the content off of this page that you'd like to use, Greg, for yourself. Or if you want us to create a landing page for you, Greg, or anyone else that really summarizes this and then allows the intake to be in this format, we certainly can facilitate that for you. All right, Claude says, or ask, kind of the difference between for-profits and nonprofits. So there's different types of entity structures, and we talked about that a little bit here. So we have the LLCs and the S Corps and the C Corps, sole proprietorships, partnerships, and then as Claude brings up, nonprofit. If you're going out as a distribution partner trying to work with churches and chambers, and if you're wanting to chase after grants like we've been able to successfully do, then it probably does make sense to position yourself as a nonprofit. If you're going to just be a traditional business pursuing traditional business goals, then you probably don't need to be a nonprofit, right? But either one is, it's up to you, Claude, what you want to do. And if you have a business plan, the business plan will tell us what your intentions are. Or if you need help, then of course we can assist you with that on this first bullet. All right, so again, if you're looking for money to start or grow a business, you'd want to come over to the SBA checklist page, fill this out. This hopefully will help you become more aware of any deficiencies that you have, and then we can focus on those deficiencies over a 28-day period, get your business fundable, so then you can get the money that you need to start or grow a business. If you're alternatively a distribution partner, then this information should be incredibly valuable to you. You just need to decide how you want to use it. All right, Harold's asking about becoming a distribution partner. So if we scroll down, you can go over here to the white label partner page. We've had a separate training on it. It's a very simple page, not much to it, but there's no upfront cost, and you can become a distribution partner, Harold. We had a recent training on this last week where we referred to it as a side hustle, because we know most of you have other business interests, other areas of focus. But if you would like to get paid to help people and add a new side income, if you will, we do project that you should be able to make $44,000 a month. How is that calculated? You generate $11,000 for each person that you refer in. So it's not get rich quick. It's not like winning the lottery. It's probably not the type of money you're making already, but it's a side income. And so the goal would be to help a client a week, 4 clients a month. 4 times 11,000, of course, is the 44,000. You might say, well, that sounds enticing, but I don't really understand. That's why the white label partner page is here. You can learn about what we do and how we educate. You can see the press release we use to develop with distribution partners. And then if you wanted to get started, we have a fee waiver. There used to be a license fee that people had to pay up front to be a white label partner. Now we have a fee waiver. So if you come over here, you click on this, it'll pop up and you'll see that it is with the fee waiver. The concept of the white label partner is real simple. You're a referral partner, but you go out under your own branding and you actually get to set your own pricing. That's a Cliff Note version. But again, if you go through this training, you'll understand it better. So Harold, if that didn't answer your question, let me know. All right, but back to our focus today. So the SBA checklist, I believe it's an incredibly ethical, honest, transparent, effective approach at helping prospects connect the dots. Because what you and I know, I've said this many times, most people don't know. They don't know what it takes to be fundable. And they usually don't care, right? They just want money. Just give me money. I just need money. I need money bad. I need big money now. But it doesn't work that way, right? There's not just a money tree that we go out and we pull like apples off of an apple tree in an orchard. There's a lender that is loaning the money with the hope, with the expectation that they're going to be repaid. Kind of makes sense, right? That's what lenders. So that's an interesting point. I think Pauline's hinting towards this. There is no shortage of money to start or grow businesses. And yes, brand new businesses, brand new startups can qualify. So there's no shortage of funding. Understand, lenders want to loan money. I think sometimes, and I'll even hear some people say this, banks don't really want to loan money. That's crazy talk. They absolutely do. They have incentive systems for their loan reps to place more loans. That's what they do. Banks do want to loan money. So if you've become jaundiced, negative, where you think that, oh no, banks don't really want to loan money, that's wrong. They definitely want to loan money, but they want to loan money to people they think are going to pay them back. And that's, in summary, what we talk about is the business fundable. So we're playing a game here. legally, ethically, but there's rules of the game. We're going through what the rules of the game. Have you ever played Monopoly, like when you're a kid or with your kids? You know, there's rules of how you buy properties and how you collect rents and how you move from houses to hotels, all that. There's rules. Well, there's rules in business. This is a subset of the rules of what it takes to become fundable. And you and I can go out and teach people this so they know. And then if they want help, we can help them. All right. Any questions, comments, concerns? Of course, you can give us a call if there's anything that you want to discuss. You can email us. We get together most weekday mornings at this time. Anything that we missed today. But I hope as you stop and assimilate this, you'll realize this is incredibly, incredibly valuable, because this, I think, was what was missing. This is the missing link. Our program, our 4-week funding program, has been performing remarkably well. But the problem has been just some people just didn't get it. They didn't realize why they needed it. They just wanted funding. They didn't want help. Now we can articulate very easily what does it take to be fundable, and then they can do a self-assessment. And then, I mean, and we've had a couple clients or prospective clients just over the weekend since we rolled this out. They submitted this with no check marks. So what does that mean? Oh, no, I've got everything. My business plan, well, we'll go up here. I've got everything. My business plan is lender compliant. It's perfect. Oh, I've got all the documentation for my lease. It's fine. Yep, my entity's in good standing. No problem there. Oh, yeah, I've got all the collateral that I need. No problem there. Oh, yeah, I've got all my financial statements and my credit's great. Well, wonderful. That's wonderful. That's probably about one person out of 100 that we run into. But if that happens, great. Then we don't need the 4-week funding program. We can just go ahead and take them to one of our lenders and let's go get the funding, right? Let's skip the prep because they're already ready to move forward to funding. But it's very rare that you'll find someone that has all of the elements. Almost always they'll have some, but they'll be missing some. And I'll close on this. And it states it right here in bold. It's not that partial is good enough. You might say, well, I have 5 of 6 items. Let's go. No, you have to have 6 of 6. Well, I have 4 of 6. Isn't that good enough? No, you have to have 6 of 6. Now, there are different lenders that have somewhat different underwriting criteria, but in general, we need 6 of 6. You can even score people. We started doing that. We can give them a score, right? So 1, 2, 3, 4, 5, 6. 6 elements. 6 elements. 1, 2, 3, 4, 5. 5, 6. The last one is if they want funding right away. That's not an element. So of the 6 items, how many do they have? So sometimes that helps people just understand, okay, you have a 3 out of 6. Great start. Let's work on the other 3. And in 28 days, we can go get funding. All right. Well, we're running long. Thank you so much. We'll see you back tomorrow. If you need to reach us, you know how to do so. Have a great day and talk to you soon. Bye-bye.